Okay, good morning, everybody, and welcome to the Daily Energy Markets podcast, looking at the open in Asia and where the markets may be moving. It looks like little change this morning after a roaring 3% surge yesterday and a continued push from last week. Let's kick off this morning deep into Asia with Peter McGuire, CEO of XM Australia. Peter, Oxycron is behind us. The markets are roaring back to that $80 where they were very happy. What's your take on the direction of things at the moment?
Well, good morning, Sean. Greetings or good evening from Sydney. I'll tell you what, a cold, wet Wednesday evening here.
Oh, wow.
And it's the start of summer.
Well, so it's a lovely 25 degrees here, I have to say. The sun is out and all is well. And we're even changing our, you guys changed the hours of your days back and forth. We're changing our week. We're now moving to Monday, Friday. It's under this move an hour this way, an hour that way. We changed the week.
That's the way you want to play, brother. That's the way you want to play. So building on your question. And welcome everyone. Building on your question. Look, all I can say is what we saw overnight was very, very strongly bid up. As you mentioned, 3% for NASDAQ. It really shot the ball out of the park. S&P bid up, and so was the Dow. As far as Asia today, it's been a fairly strong day. New Zealand's up 2%, and most of it's green lights, so that's a strong point. Crude has been a dynamite trade over the last, 3 or 4 sessions. Incredibly volatile, Sean, and just offering so much opportunity from a trading perspective. So US dollar still sitting at 96.15, 96.20. Maybe we're going to see a little bit further uptick for that. Inflation's out of control in the States, as we all know. China's doing pretty well with inflation, and the rest seems to be booming. Santa Claus rally on the way through.
Peter, you mentioned in your earlier comment the reference to inflation. I was just looking at your note last night, your daily note. You're up to a 4-decade high. We have the Fed sitting on comments of accelerated taper. What's your outlook for that? And what does it cross into the energy markets if indeed they do accelerate the tapering?
Well, Sean, is 7 going to be the handle? As we're going to be at about 6.8 odd. Is 7 going to be the handle that we say, well, that's as far as we go? Or by February, are we at 8% or 8.5%? So that really creates, I think, a lot of fear as far as the Fed's concerned. Taper, I think they'll have to move possibly a little bit quicker than what is expected. Do we get 2 rate rises baked in for next year and everyone's saying it's already in the cake? Or do we hit 3? I heard a guy say I heard someone say 4, and I've even heard rumblings of 5. So there creates a lot of angst for traders and certainly for participants as far as bond traders and currency traders.
Are you saying, Peter, that you could see the two things happening simultaneously, not only the pullback on the bond buying, but also rate rises at the same time, or are these staggered one after the other?
Well, I think they'll be staggered one after another, Sean, but I'm not sure of the velocity, how quickly they'll be rolled out, because if we're at 8% by February, the Fed's got to move probably far quicker than what they thought. It's certainly not transitory, and that creates a lot of fear. So from a trader's perspective, so that really is the unknown pushing forward. And this all creates, I think 22 is going to be a very dynamic year and a very volatile year. What happens as far as crude prices, possibly they do march up further from here. Maybe they do hit it through an $80 by Christmas. It's been an extraordinary, as you're building on what Vandana said, an extraordinary month or matter of weeks for a trader. And I think that there's possibly further upside leading into Christmas.
Peter, is this Santa Claus rally one to sell into or buy into?
Well, Sean, depends on I think the instrument. If you're looking at crude, if you want to be a crude trader, then I think you've got to buy into it at the moment because it's just showing strong move to the upside. It might get exhausted in a day or two from what we've seen because it's been nothing short of dramatic. So the opportunities have been great. If you're looking at equities, this time last week, it gave back at those soft non-farm payrolls Friday night underwhelmed, Sean. They were 300,000 odd shy, or 350,000 shy of what they forecast. So that coming in was certainly a dampener. And the Omicron story, well, if you're looking last night, it was a Pearl Harbor delight for all the bulls. So I think from an equity trading standpoint, you'd have to be buying at this stage because there's more momentum pushing prices higher.
From the Chinese perspective, I mean, the idea that the oil price recovery is could it test the previous highs we've seen? China demand looks increasingly uncertain. We had commentary earlier in the week that this might be the first year in 20 where Chinese oil imports actually decline year on year. The outlook there isn't solid. Hard to see new peaks in oil price if China isn't buying to the scale in which previously it was.
Yeah, I agree. I mean, we're only talking of it's got the potential of probably an 80 to 85 handle, and we're not that shy of it at the moment. You've got, 75 and a half for Brent, so it can get up there within by end of week. And I'm not saying it's going to be there, but I wouldn't be surprised in the next week or so. It still hasn't unwound the Evergrande story and the property sector, which generates or accounts for 30% of the GDP. So there is the concern, Sean, such a monster of value, $62 trillion, and the fragility of the Chinese economy over the next couple of months, I think is going to be, if the tide goes out, we'll see what they're actually wearing as far as swimwear.
Peter, your thought on that? I mean, from an Australia point of view, you guys have finally seen the light and we're opening up and no more the zero, sort of zero tolerance. Where is it at, do you think, Omicron, from your perspective in Asia?
Well, in Asia, it's a different footprint to Australia, Sean.
Right.
If I talk about the Australian mindset at the moment, it's one of, I don't think it's hit Main Street significantly, and no one really seems to be talking about it, certainly not in the network that I associate with. So We'll just have to wait and see how it rolls forward in the next week or so. We are an island.
It isn't reversing the trend of opening up that Australia has now departed on.
No, I don't believe so. So I believe we've still got green lights, and I think that as soon as next week there could be further lifting of certain conditions, which is a good thing. So that's where we're sitting at the moment. What impact it has to the markets? Well, if I look at the markets, if I see what happened as far as Wall Street last night, very, very strongly bid up. But the market's volatile. I mean, we might even go backwards tonight. Let's just wait and see, because it's we're only in the early stages of it, and time will tell, Sean, as far as the appetite, as far as investors and the sentiment running across the market.
Let's wrap it up there. The oil prices are trading ever so slightly down this morning in Asia, now the afternoon, of course, in Asia, and Europe waking up. Will they take the momentum from yesterday? 3%, it's a big number, but we're still got $5 off of 80. Maybe there's upside there, as Peter points out. Rustin, thank you as always. I don't think you guys will be on again before the holidays, but wishing you all very, very Merry Christmas. And thank you so much for all of your insights. And we look forward to seeing you on the other side of the new year and see where all of this is at to kick off the new season. But thank you. Merry Christmas. Thank you, Vandana. All the best in 28 balmy Singapore. I'm sure Santa Claus will still come, even if it's not snowing. Take care. Thank you very much.
Thank you.
Thank you, Sean. See you, Rustin. Bye, Vandana.
Everybody stay safe.
Thank you. You too, man.